Hi, I'm Andrew Wright, Principal of Professional Southport, and this is the Andrew Wright Property Podcast. I've built a multi-million-dollar property portfolio, delivering a seven-figure annual rental income, and led my real estate team through thousands of sale and lease transactions. In each episode, I share real deals and strategies that will help you find, fund, and operate profitable property deals. The aim of this show is to provide education and build a community of like-minded investors who can collaborate, share insights, and help each other in each other's journeys. You can make excuses or you can make money, but you can't do both. So come and join us. Hello and welcome back to the Andrew Wright Property Podcast. I'm thrilled that you're here, and I'm pleased to say that I've convinced my good friend Gus Vella to come back into the studio for part 2 of his story. Gus, welcome to the podcast again.
Thanks for having me back, Andrew.
So last podcast we talked about 4 or 5 deals that Gus has done, including one where he profited over $5 million. If you missed that episode, please scroll back to the last episode and have a read and a listen to that before you go through this episode. Gus, we've got 4 or 5 more deals here that we're going to talk through, and I've written down the addresses of the properties, and if you can explain to the audience the strategy behind them and how you financed the deals and what sort of profits were generated by each of these deals. And the first couple are actually beachfront properties, and when I think as a real estate agent or a real estate investor about scarcity of property,
yes,
there can't be anything more scarce than beachfront land.
True.
The first deal that we're going to run through is number 6 Surfside Crescent in Pottsville. Talk us through the deal, mate.
Yeah, well, when I think I was about 30 years of age, I was looking for an investment property for myself as such, and searched long and hard, drove up to the Sunshine Coast, even further north up to Rainbow Beach, all these areas, thinking, where's an area that has got potential, not something that's already happened.
Were you chasing beachfront in particular?
Well, as close to the beach as possible, depending on price. I had a budget, I had finance approval, I could go to a certain point, which was $200,000 at the time, which doesn't seem like a lot these days.
Gee whiz, it sounds so cheap, doesn't it?
So I had a look around, and I thought, well, I'll go the other way. I'll go south, and I went down the coast, down as far as sort of Byron Bay, sort of keeping it somewhere within, a couple of hours of where I live.
Yep.
I came across this area called Pottsville down the Tweed Coast, which wasn't that far away from the Gold Coast when you look on the map and take a drive. It's even closer now with the better infrastructure. The roads are much better. And I investigated the area. There was a high level of unemployment, which was a down point, but that's what kept the prices down. But going further south, places like Byron Bay were taking off. And that didn't have a high employment rate either. There's a lot of people that weren't exactly working.
Yeah, I remember that.
Area.
That was the stigma of Byron Bay. Is come down for some marijuana and chill out and
that sort of thing. So I looked into it. I'm going, well, this area's got potential, as do other areas in that Tweed Coast area. Came across a property opposite the beach, a 2-story brick and tile house, 3-bedroom with a rumpus room, double garage on a corner block opposite the beach. Like the sign to the beach was right in front of the property, across the road, but it was all reserve and approximately a 50-metre walk or so.
So we won't call that one beachfront. It was like beachside because there was a bit of a park in front of you, sort of thing. Okay.
Yeah, but there was nobody built between me
and the beach.
Gotcha. So yes, but people could park their car in front of my house. Yeah.
Purchase price?
That one I purchased for $195,000, fully furnished.
Was it under asking price or you paid full price?
I played just a little bit below, but
Yep.
close to the asking price. But I negotiated it a bit. But yes, it was a good deal. I thought well priced and in a good location.
And what did you do with the property and how long did you hold it?
Well, the idea was to rent it out and maybe to use it ourselves. I had a young family at that stage. I had one child and another one not long after. So we were somewhere to go on holidays, which wasn't that far away, but predominantly renting. So the day we settled, which I think was just prior to Christmas, like within a couple of days before Christmas, and I had the day after we settled, I had tenants in there paying $600 a week, which was in equivalent to today would be a lot more. Through the holiday period, so that for that 6 weeks.
Was this short-term rentals?
Short term, yes, but through the agency that that I bought the property through in Pottsville, and they said we could rent this out because it was furnished, it was ready to go, for $600 a week.
$600 a week. That's
for those
$30,000 a year if it was rented 100%.
That's for that period. So every school holidays I could get that, and they could also find me tenants in between, paying on a more permanent basis, which was more closer to the $250 a week.
Okay.
But I mean, I had it fully rented all the time.
And the cash flow was all right.
I struggled to get it to use it myself because naturally
everybody else wanted
it, being where it was, and I did nothing to it. It was as is, where is situation. Yeah. And
what triggered you to sell it, Gus?
Well, an agent approached me down the track and said, because what I did do to the property was I looked at the carpet and it was getting a lot of wear and tear, and I looked underneath and there was some nice timber floorboards there, which I thought would come up well if I had them polished and sanded, polished, stained, and did wonders to the place. It just brought it to another level. Even the agents were surprised, and they said, you could get some big money now. And I'm thinking, well, only just bought it up. This is after 7.5 years after we purchased it, and did very little to the property apart from that. And they sort of suggested we could get somewhere, around $600,000. And I said, really? But nothing much has changed here. It's all still high unemployment, still this. But but land near the beach, it's becoming more popular these days, and people are paying more for it. So we put on the market and we did sell it for $600,000 at the time, which wasn't what I bought it for, but I wanted to see what else I could do with the money down the track. But I mean, we made that capital gain out of the house. Yeah.
Okay, so all you did was rip up some old carpets, polish the beautiful timber flooring, which some buyers will pay a premium for.
So we spent maybe a couple of $1,000s. That's all we did.
And you tripled your money.
Tripled it.
Tripled 200 to 600 in 7 years.
Yes.
Another great story.
Well, yeah, that was a good result considering I wasn't expecting that. It was something. I can't say I was smart in knowing that I was going to triple my money in 7.5 years, but certainly position in this case was very important in getting a good result.
And that result has obviously, this is 7 years later, you've kept that same mindset with your next sort of project there. You've gone beachfront again, and I'll just look at my notes here. So you've gone and bought 2 properties at North Point Avenue in Kingscliff, known as the Salt Development.
Yes.
Talk us through that deal number 2, Gus.
I had a close friend of mine who was a building designer / architect, who we talk socially, and amongst other things, we were both rugby coaches at TSS at a private boys' school, and became good friends. And he saw that I was going down there a bit on holidays and things with my family, and he mentioned that they were going to be developing an estate down that way in the near future. So that triggered some interest that I wanted to have a look at what they're proposing, and I was quite taken back, thinking, what I just achieved at Pottsville, and this is actually in South Kingscliff, so not that far between the Gold Coast and Pottsville, closer to the Gold Coast. And they had a master plan, and it looked fantastic, with a commercial precinct and some absolute beachfronts and beachside and a lot of nice amenities in a really nice community, nice feel about it. But when I looked at it, there was just sand dunes. There were no roads. Right. It was all proposed. So I got wind of it, and like I said, my building designer friend told me about it, and I went for a drive. He said, you should go for a drive one day. So I went down, had a look around, and asked a few questions. They had a display office in Kingscliff itself to start things off.
A mobile home or something?
Yeah, that sort of thing.
Open the sliding door and walk in, and there's these plastic displays of what it's going to look like. Yes,
it's all proposed. This is in the next couple of years. This is going to happen.
Yep.
And when you look at it, there was no road to go in there. You had to just, You
had to have vision.
Vision is a very big word, yes, for this. So I saw the potential, having experienced it, and had a look at it, and they showed me the site, and I thought, how close can I get to the beach? And there was a road called North Point Avenue at the time, which on one side of the road was absolute beachfront, but they had all gone because friends of the developer had already gobbled them up,
Gotcha.
people that he knew.
Yep.
I had to be on the other side of the road, but, depending if they built a house or not, you could have, beach,
water views,
that sort of thing.
Yep.
So I snazzled up a couple of blocks next to each other in that location. And while I was there, even the person who told me about it, he was one of these people that missed out on a lot of opportunities in the past, would tell me I could have bought on the Sunshine Coast before this happened. I could have bought down at Byron Bay, or I could have bought up here. And I thought, well, why don't I put a deposit, help him out, put a deposit down on one of the properties, similar to mine, just next block, same location, and surprise him, and do that sort of thing. And
this was just a favour to one of your mates. You're just trying to help out.
Yeah, well, he was the sort of person that needed some encouragement, be pushed, because it took a lot of convincing, especially his wife, to get him to go through with this, because. And I just kept on reminding him. Remember those stories? He kept on telling me about the opportunities he missed out. But you got to, if it's meant to be, it's up to me. That sort of philosophy. Not it'll just happen. It won't happen. You have to make it happen. So I sort of encouraged him, because he asked me not long after that. He said, "Oh, did you go down and have a look at that site?" I said, "Yeah." He said, "What do you think?" I said, "Yeah, I bought a few blocks. Put a deposit down, and actually I'll put one down for you too." He was taken back, going, "What do you mean?" I'm going, well, you told me about it. You told me it was a good thing. You thought it was going to be a good thing. Well, I made it happen, like I put deposit down, just a small deposit to keep it.
So just to clarify this, your motivation there was not to tie up a site and flick it at a profit to your mate. You're actually putting that third one in his name just to help him out as a mate. Is that what happened?
Yeah. Well, he was a good friend of mine.
Yep.
No commissions, nothing like that.
Yep.
And even when I'm not sure if you remember, but I was a school teacher back in the day, and the person I went to the same school, and we spent time living together at uni while we were going to uni. He was also quite taken back that I was looking in that area, because his dad had retired and moved to Pottsville, and saw what I did down there.
Oh yeah.
And took a bit of interest into what I was doing, and might have mentioned to him over a social function, where I was going to buy and all that, and told him about it, and he was obviously sparked some interest there. He in his lunch break one day, he grabbed me, and he said, "What do you want to do?" He says, "Take me for a drive where this land's going to be, or where you bought, because I'm really interested, So anyway, we went down, same thing. In this case, we actually went to look at it together.
Yeah.
I took him to the office and just showed him, just pointed in the direction. That's where it's going to be, over those sand dunes over there, because we weren't going to walk through some sand dunes, but that's where the estate is. And he says, "Well, can we go and find the best possible block that's available now. This was a few weeks later, so he couldn't get the same blocks, but not far away. You know, we're talking 100 metres further in, and he bought it then and there. He bought a block. He said, and you've definitely bought that. He said, I bought those two. My mates bought that one, you know, and all that. And even a guy I knew in the finance industry, he bought the block next to that. So a lot of people that heard I was buying in there got something, you know, they felt positive that this was something that could happen and go well. So he also then bought a property and he was the first house to be built in the Salt Estate and got publicity all over the news. First house built, and that was my school.
So Gus, before we go through the numbers on the two that you bought, how did your mate go with that investment?
Yeah, well, approximately 12 to 18 months later, when the land got developed and there were titles to the land, he wasn't, as it was hard to convince him to buy the block of land. So he wasn't going to go build. He wasn't a risk taker to go and build on it and further develop it. He decided to on-sell the block of land and spoke to a local agent to on-sell it. And come settlement time, he did a simultaneous settlement with somebody else who showed interest to buy that block of land. So the day he actually settled on the block of land,
that's contemporaneous settlement.
Contemporaneous settlement, that word. He settled the same day and doubled his money on the same day. So whatever, I think the block of land was around 285 to 290.
Yeah.
And he got closer to 600,000.
So 100% profit one day, and he didn't even have his money tied up.
No, because he actually put did
he buy you a drink afterwards to say thank you, Gus?
Yeah, he did a couple of things like that. He actually got a deposit bond, so he didn't have the funds to get a deposit. So he got a deposit bond, which might have cost him $1,000 or so to hold it for that, say, 12, 18 months.
$1,000 to make $300,000.
Yeah.
Yeah.
So he had a better story to tell because that's all had to
that's
put.
Leverage.
That's a good return on your investment. So that was that's what he and we're funny enough, we're friends for life now. And a few years later, I had my 50th birthday party, and he actually got on stage
to thank you. Yeah, that's a beautiful story, mate. Yeah, those emotional things, like when you're on your deathbed, you remember those sort of things. That's awesome, mate. So good on you. Okay, well, let's go through the numbers on your two now. So I've written down here that number 9 and number 11, North Point Avenue in Kingscliff.
Yes.
In a nutshell, you've bought the land and you've actually done the ground up construction. You've actually built houses on both of them, and you've sold them both at a combined profit just under $1 million and a 50% profit in what period of time, Gus? Tell us the deal.
Well, having both blocks of land next to each other, one was a corner block, number 9, North Point. That was a bit bigger block. I think it was around 62 square metres. And the number 11 was next door, 602 square metres. Purchased the corner one for $334,000, and the one next to it, similar to my friend's block, that was at, I think, $288,000. So I built the corner house first.
Yep.
Used the same builder and then staggered it, and because I pre-sold that one and started on the second one next door.
So is that just purely to minimise risk, or because you couldn't raise the money to build two at the same time?
Yes, I couldn't do two at the same
Gotcha.
time. Yeah,
okay.
It was limited.
Too
on
expensive.
funds. Yes.
Yeah. Okay.
Because they were quite good quality homes. So the house on the corner, for example, was 5 bedroom, 3 bathroom, 3 garage, media room, study. You know, quite a substantial, nice home. It cost to build. The construction cost for the house was $600,000. I know it's hard to believe, but that's what it cost to build a house then. So with the land was, you know, somewhere in the vicinity of $934,000. Then I added on a pool on top of that, and you factor in some interest. You know, it would it'd be close to the $1 million mark.
Cost you $1 million,
all up.
and you sold it for
1.5 million.
1.5, so 50%.
I had a buyer before I finished it.
Yep.
Wanted me to dealing direct. So I sold it myself.
Yep.
1.5 million, and I actually tried to delay it as long as I could. So I put into the new financial year. So the actual sale went through on the 2nd or 3rd of July. So
deferred tax for another year.
Just for another year, because otherwise would have been paying for a lot
Gotcha.
sooner. So that was that. So that one was sold for 1.5. The one next door, I sold that one as well myself. So I was doing open houses and doing that sort of thing myself. It's a bit of a travelling, but yeah, it's quite an enjoyable place to be by the beach. So I sold that one for 1.23 million to a person who from Queensland, from a place called Sovereign Islands. He sold his house on the Sovereign Islands.
Familiar with that area?
Yeah, I heard of that area too. And he bought his house and moved from Paradise Point to Salt. Yeah. So
1.23. What did that one cost you to build?
That one cost me all up around the 780. So I think it was around the 500.
So
500. It was a smaller house.
So you made a 50% profit.
Still
on
made
that
a
one
good
too.
profit, similar profit, but it was a smaller block of land, bit cheaper land, cheaper build.
Yeah.
And obviously I sold it for approximately $270,000 less.
And one of your strategic benefits with your ground-up construction, Gus, is that you save a bit of money in real estate commissions when you're selling the land, because you're actually an agent yourself. You had a real estate license. I'm just curious, I can't sell property in New South Wales because I've actually only got a Queensland real estate license, but I guess if you're selling property that you own in New South Wales, you don't have to have a real estate agent's license. Is that?
That's correct.
That's the deal?
It's not like I was developing an estate or being an agent for a development. A big development. I was only on a small scale. It's fine with you selling, and I wasn't coming across as a real estate agent. I was more or less coming across as an owner. Yeah. So because I was practicing in Queensland, not New South Wales, like you said. So I could certainly do that quite legally and
What sort of entity did you use to purchase those properties in Kingscliff?
I just had a private company that I put the properties in the name of.
Okay.
So
that's fine.
Not through a trust or anything like that. So it's just through a company.
Yeah. So the reason I asked that for the viewers, I'm certainly not an expert, but another friend of mine got stung really, really badly several years ago by buying a property in New South Wales in a family trust. Please check with your accountant and lawyer on this one, but he was charged double stamp duty, and every single year he pays double the rate of land tax because his trust deed of his family trust allowed for profits in that discretionary trust to be sent to a international non-resident of Australia, and in his particular circumstances, the state government in New South Wales treat him as a foreign resident, his entity there, and they therefore charge him double the rate of stamp duty and land tax. So if you're buying stuff in another state that you're not familiar with, it's just very, very important that you understand that land tax thresholds and different structures that you use can make a massive difference on the rates of land tax and stamp duty that you pay. So just make sure you get advice if you're buying stuff in another state. Now, Gus, that obviously you've had a pretty good run here with these beachfront properties, and that sort of mindset led you to buying another couple of beachfront or beachside properties, Golden Fall Drive and Pacific Parade in Balinga. And we won't go into the numbers in a big way, but just the opportunity costs there. You ended up buying them, making a bit of money. You sold a block of units right on the beach and a house behind for about $4 million, which would probably be worth maybe $12 million now. And
that's it.
In hindsight, that's just one of those things that you wish you had held. But what triggered you to sell that?
Well, your circumstances dictate sometimes why you have to sell properties, whether it be financial reasons, matrimonial reasons, or business opportunities that come up.
Yeah.
In my case, I was going through matrimonial matter with my my ex-wife, and I needed to sell those properties at that time. So I held them for a short period of time, but I had a block of 3 apartments with a basement car park on Pacific Parade in Belinga, opposite the beach. So nice beach ocean views, and I also purchased the house behind it, which I rented out. Well, everything was rented anyway. The house behind it on Golden 4 Drive. So in total, it was like over 1,000 square meters back to back. So I thought of redeveloping that at some stage, but obviously because of what I was going through at the time personally, I had to sell the properties. I still made money, but not what I could have made, like you said today.
You'd be 8 million richer if you held on to it.
So still made money, but not as much.
It just fascinates me, the southern end of the Gold Coast. I mean, some relatives of yours appointed me to sell a property about a year ago down at Palm Beach, which we sold for just under $4 million, and it was nowhere near the beach. It was way back in Palm Beach, but it was zoned for multiple dwellings, and sold for nearly $4 million, and it was just a couple of old one knockdown house and a couple of duplexes. So all of that land there from Burleigh down to Palm Beach, it's just incredible, the valuations down there at the moment. And I feel sorry for us poor locals in sovereign islands. Like, our houses just haven't gone up the same amount as in percentage terms as down there. So
I agree.
Next deal, Gus, putting your property developer hat on, 23 to 25 Blake Street in Southport, a couple of 1,214 square metre blocks of land that came up for sale around the same time. So 2 different sites totaling 2,428 square metres. Where did you see the potential to add value to those sites, and talk us through the deal, what actually happened?
Yeah, well, at the time I started doing some developments, which we'll talk about soon, where I was buying land, either knocking down a house or rezoning the land, or whatever, depending on the circumstances, and building predominantly 3-bedroom townhouses on these properties, on this land, and selling them myself as well through my office. So I saw an opportunity there where individually, which they were individually purchased, but they were side by side, and they individually could take 4 townhouses each with the RD residential density zoning. So that was was one property per 250 square metres. So being roughly 1,214 square metres each, you could, assuming you do the right ratios and design structures and allow for everything, you could put 4 townhouses in each one. And with what I was at the time prepared to pay to make the formula work for us, we would pay $30,000 per site. So, and it was that I paid $120,000 for each property individually, which had a basic 3-bedroom brick house on it, but which was rented for that site, and times 2. So we bought also the other property next door for the same price, $120,000, and then went through the town planners that we knew, and get them rezoned and get them approved. But the one benefit I looked into, which once I amalgamated the sites, was assuming you had a 20-metre frontage and a block of this size, you could put 4 townhouses on individually. But if you amalgamated 2 like that, and you had at least a 25-metre frontage, which we did, we had roughly a 40-metre frontage, the ratio would change, the residential density zoning to 4, and you could go 1 per 200 square metres. So technically you could go from building 4 and 4, 8, total of 8, to potentially 12 on this land, which would increase the profitability, your value add scenario of the site by amalgamating the 2 sites together.
Right.
As long as there's no issues, easements, which there weren't, in between. You design something appropriate.
So if I just go through those numbers so the viewers understand. So in the these days they just have the zoning of medium density or low density or high density, but back in those days in Southport, there was RD3, which was one dwelling per 250 square metres, and a little bit higher density zoning was RD4, which is one per 200. So each of those sites, 1,214, it would have needed to be 1,250 square metres to get 5, but it was just under 1,250, so you could only get 4.
Yeah.
But by merging it with next door, you saw the value add where you could get a higher yield, more density on the site.
Or potentially you get 12.
Potentially get
from
12.
8 to 12, which...
Yeah.
And that's only because they haven't been next door to each other.
Yeah.
If they'd have been across the road from each other
couldn't do it.
Or 2 blocks away, you couldn't do that. So I saw an opportunity and made it happen, I guess, because we were dealing with 2 separate owners. The separate agents weren't advertising them as one site, if you know what I mean.
Right.
And they could have realised more for the vendors, I guess, if
right.
they had but the average real estate agent doesn't look into.
So you bought them within a few weeks of each other?
Yeah,
right?
yeah, very close timing within the same month, for $120,000 each, because they weren't rezoned. I had to go and get them rezoned.
So 120,000 for each block. So it was 240,000 purchase for both sites.
Yes.
And then you went with your town planners and your architects, and you actually went and got a development application approved with the council for 11 dwellings.
Well, we the potential was 12, but after having spent some time with my building designer, architect, to make it work properly, with car parking, visitors car parking, we come up with 11 being the best possible scenario to make it work. So yeah, we got it approved.
Yeah.
The council weren't happy with 12; they were happy with 11. So they approved 11 3-bedroom, 2-story townhouses with single garages and visitors car parks outside.
So potentially, you might have got the 12 if instead of building 3-bedders, you might have made a couple of 2-bedders and then less car parking requirements or whatever.
Possibly,
but
yes.
you worked out that the best way to go would be to the
we
11 3-bedders.
We had a formula with what investors were looking for, for renting and all that. And 3-bedders didn't cost much more than a 2-bedroom.
Yeah.
So it worked out better in that respect. So we got council approval for 3-bedroom townhouses.
And you didn't build that site? You didn't go on and build the townhouses?
At the time, I was doing other projects. I was doing this on the side to get it ready for another development to do down the track. An opportunity came up with a person that I knew in business, a person in the finance industry, and he wanted something ready to go. He wanted to get his hands on something straight away. Yep. And I said, well, I've got something here happening. And his office was in Southport. The properties were in Southport, and he dealt with a lot of investors, and he was closely aligned to a builder. So he could go. He wanted something ready to go. Didn't want to wait 9 months to get it rezoned and get it approved.
And you already had the approval
at
this stage?
Yes,
okay.
We had it all approved, ready to go.
Yep.
And he offered us a price, which at the time we thought, well, this is in the late 1990s. We were struggling to find builders at the time because there was this thing going on in Sydney called the Sydney Olympic Games, and all the workers were on the Gold Coast were heading down south and making a lot more money than they were making on the Gold Coast. Yeah. So we were struggling to get all the trades here at the time with our other developments we were doing. And there was even a bit of concern around, there was also this thing called GST coming in, and there was a lot of big question marks being asked and around
99. That's exactly when GST came in, isn't it?
Yeah. All happening around that same time with the Olympics and that, and what's going to happen when it clicks over to the year 2000. There's all these
world's going to end.
All these things are going to happen. So we thought, well, we said, would you sell it? Yeah, we'd sell it if we get somewhere around 500,000, because it owed us roughly $240 for the acquisition. And by getting it rezoned and all that, it was approximately $20,000 in cost, so around the $260 mark. And we agreed on a price of $495,000, and he could take it over. So this was a 9-month transaction.
Okay, so you nearly doubled your money in 9 months.
Yeah, without the risk of
without pulling a shovel out and digging any holes.
Having to sell anything. And it was a private, again, it was somebody we knew. We didn't engage a real estate agent or anything. It was something done privately. And it was a quick transition, like a quick settlement. And he was happy. And we also had there was another site nearby in the same sort of street, which we were working on, same thing. And he acquired that as well. Not as big, but similar, same thing. So he built, I think it was 20 properties in the street, 11 there and 9 in the other one, and similar. So
I'll go back a step for the listeners, Gus. So you had the skill set to put those 2 blocks of dirt together so that you could increase the density of the site and had an uplift in the value of the land. And because of that skill set you had, the local knowledge of what the town planning laws were with the zoning, you used your skill set to do, once you made some money on that one, you bought another one just up the road in the same street.
It was all happening around the same time.
Corner of Ann Street and Blake Street, you bought another site and you leveraged your skill set and knowledge because you knew the numbers.
Yep.
And you made money again on another site just up the road doing exactly the same thing.
Similar exercise, similar.
Yeah.
So yeah, it was worked out. It was a sort of what I call a win-win situation because he had a builder ready to go. We were struggling with builders, he was ready to go and he sold them and had to pay a selling commission, which we didn't have to because we would sell them ourselves. But yeah, it still worked. It was a win-win situation.
So there's 2 deals that you did in quick time, just buying vacant land, getting a DA, getting a value uplift and flicking it on.
Yeah.
Next deal, Gus, ground up construction, 6 Burleigh Glen Court, Burleigh Heads. This is your joint venture with your friend Jack.
Well, the other ones I just spoke to you about, they were also with Jack.
Okay.
They were, especially the one on the corner site was predominantly Jack, and the other one was between us because we were in the twos and fro's in between developments and getting some land rezoned rather than buying something ready to go. We were also acquiring raw land and rezoning it, trying both. In some cases, it was already zoned and ready to go, already buying it approved, and in some cases not. So
6 Burleigh Glen Court, was that already had a DA on it?
Yes. And
tell us about the deal. 1,282 square metres of land, and you built 5 townhouses. Can you remember the numbers roughly?
The land was $150,000.
Yep.
We had a formula of paying $30,000 per site.
So 5 times 30 for the land was 150.
Yep. And then the building cost was $350,000, which was $70,000 per 3-bedroom ensuite townhouse with a single garage.
Yep.
So that was 70,000 times 5. What's 350,000? So
okay.
So approximately $500,000 was the cost of building the properties and acquiring the land.
Yep.
And the interest factor I think came to around $31,000. So that was our all-up cost.
Yep. 531.
And then from a selling point of view, both Jack and I sold the properties ourselves through our
with your real estate license.
My real estate license through our office, and taking in inquiries and selling the properties ourselves. And we sold them between $162,000, $163,000. That was the sale prices we achieved. So that was about a total
just go back there. So you've
$811,000 for the 5 properties.
Okay, 811, and it cost you 531. So you made about 50% profit again on that deal.
Yeah. And this is in the late 1990s.
Which
1997
would have been a lot more money back then. But
definitely,
in terms of percentage terms, the message I want to get across is it's 50% return, not a 20% developer's margin.
And we sold those properties, May, June, July, like they were all in the same two and a half months.
Right. So they sold
and
quickly.
We sold them all quickly ourselves, and
And for that reason, because of the success, you went to another site, which is our next site, 4 to 6 Kari Court, Burleigh Heads, where you've scaled it up a little bit, and you did the same thing again with 10 townhouses.
Same thing. Like I said in your previous podcast, start small.
Yeah.
That was our sort of my first development being 5.
Yeah.
With a joint venture. This one you mentioned just now was probably my last one I did with Jack, and because there were several other developments in between, including those blocks of land we just talked about in Blake Street and all that.
Yeah,
so they're in between the two.
Yeah.
And that one was just naturally a larger site and ready to go with a DA for 10 3-bedroom townhouses. So we just did a similar exercise, similar formula, just after in the new millennium in 2001.
And I don't want to put words in your mouth here, but I've just scribbled down here that you made 50% profit margin on those 10 townhouses as well.
Yeah, similar money again. Yeah.
And just like talking about the leverage effect here of property, like you've done 5, you've done 10, and at that time too, I believe you're living in Southport in Wild Ash Street, and even though that's not a property development, you picked up $1.5 million tax-free on your principal place of residence there during that time as well. So when you're stacking all these different sites and you're getting that compound growth, it's just showing the viewers and the listeners the power of property.
Absolutely, yeah. I certainly believe in it. And, like I said to you in the previous podcast, especially with an investment property, if other people are helping you pay it off, be it the tenant and also the taxation department that you're normally paying, where you're paying your income tax and reducing it. What a great system! What a great scheme, and it's all legal. Yeah.
Gus,
your home's even better because it's tax free, but then you've got to obviously pay that off as fast as you can because it's not tax deductible, but certainly it's tax free when it comes to selling as well.
Yeah. Gus, I'm thrilled that you agreed to come back for part 2, and we haven't covered all of your property deals by any stretch of the imagination, but there's so much knowledge there that our viewers can learn from, and I really appreciate your time, and thank you for coming in for part 2.
Thank you. Thanks for having me again.
Thanks, Gus.
All the best.
Cheers, buddy. Thank you once again for tuning in to the Andrew Wright Property Podcast, and we look forward to you joining us on the next episode. Thank you. Thanks for listening to the Andrew Wright Property Podcast. This is all about building a community of like-minded investors who can share real-life stories, experiences, and collaborate with a view to helping each other. Join us. Get in touch through the link in the show notes. I look forward to you joining me on the next episode.